Welcome to our 19th Trader Chat. It is the 1st of February 2012, and it's an interesting date, of course, 1/2/2012. But anyway, let's move on to our disclaimers. Our first disclaimer is a risk disclaimer, which reminds us that all trading involves risk. Please be aware of and accept this risk before trading, and never trade with money you cannot afford to lose. Past performance disclaimer tells us that the past performance of any trading methodology is no guarantee of future results, and no representation is being made that any account will achieve profits or losses similar to those discussed in this webinar. Finally, the hypothetical disclaimer: you should know that all results should be considered to be hypothetical unless otherwise specified, and hypothetical performance results have many inherent limitations, and unlike an actual performance record, do not represent actual trading. Those are the legal disclaimers that we're obliged to broadcast at the front of our webinar. A few quick comments about using NetViewer. I see a few new names there. I know many of you have been with us before, but you should know that the best way to ask questions or to communicate is by typing a message in the chat window. If you cannot hear me, you should slide your speaker slider up to the right. Of course, if you cannot hear me, you wouldn't have heard that either, so I need to find another way of explaining that in future webinars. If you'd like to talk to me, and if you have a headset to avoid feedback or howl around, you can right-click anywhere in the NetViewer window, and please enter a chat message, because many right-clicks are accidental. There is a bit of an audio delay, so it's a less preferred method, and please be careful of those mouse clicks, because they put up brightly coloured arrows. Which at least lets me know that people are still there, but be careful of them, because they can be a little distracting. We have been mentioning over the past several weeks our mentorship scheme, which is up and running now. We have several mentors who are ready to mentor you if you would like to be mentored. This is mentoring in terms of using Sentient Trader. What we wanted to do was people who feel that getting started with Sentient Trader is a little daunting. If you'd like to be mentored by somebody who is using Sentient Trader, a Sentient Trader user, not merely a Sentient Trader member of staff. These are genuine Sentient Trader users who use the software, who love the software, and would enjoy helping you get started, then send us an email to info@sentienttrader.com. It is a really good way of learning how to use Sentient Trader. There's the email address, info@sentienttrader.com. Our online workshops, we are right in the midst of our intermediate workshops at the moment. We did intermediate workshops for the American time zone last week. This Saturday, we have an intermediate workshop for the Australian time zone. Send us an email at workshops@sentienttrader.com if you would like to book a place. It's not too late. We can accommodate, I think, another 1 or 2 people. We keep the workshop groups small, so that they're sort of fairly intensive, small groups. But there are 1 or 2 places still available. For this Saturday Australian time zone, it would be Saturday afternoon in Australia. Frighteningly early European time. But if you're in Europe, then you could probably make it. Or in South Africa, of course, that time zone will suit you. And just a reminder that we do these trader chats every 2 weeks now. We were doing them weekly. The reason we do them every 2 weeks is because every alternate week we do a Hurst signals chat, which is a slightly lighter conversation, if you like. It's a little less intense. It's aimed at people working with Hurst signals who don't necessarily need to know or would be interested in the complexities of cyclic analysis of a market. So today's Trader Chat, where we go into a little more depth. And it's particularly aimed at current users of Sentient Trader and people who are interested in becoming users of Sentient Trader. Today we're going to be speaking about the euro to US dollar. I'm going to talk about what I think is happening in the euro to US dollar. As always, I invite your comments. If you think something totally different is happening in the euro to US dollar, I'd love to hear about it. Hurst, of course, famously said that you get two analysts performing an analysis according to his cyclic principles, you will often end up with different analyses. Interestingly, though, different analyses often result in the same trading decisions being made, which is something that I'll be coming back to today. Here is a chart of the euro to US dollar. This is a fairly long-term chart. This is data going back to 2000. In fact, I think if I zoom all the way out, I've got data going back all the way to 1993. But for various reasons, I didn't want the software to overemphasize that trough in 1993. Anyway, the actual analysis starts in 1996. As you can see, this is a weekly view. Let's put on the monthly view, which gives us a sort of slightly more long-term picture. So, according to this analysis, and this is an analysis, just a default analysis. I've taken Sentient Trader. Sentient Trader, by the way, we published the latest update this morning. So if you're a Sentient Trader user and you haven't fired up your Sentient Trader yet, you should update to the latest version. So this is the latest version, and this is a default analysis. I haven't applied any expert models or anything. I simply pressed the analyze button, and Sentient Trader did all the work. And as you can see, it has found the longest cycle in the data that it's able to find is a 9-year cycle, and it believes that the 9-year cycle formed a trough in the year 2000 and again in 2010. In all the previous discussions we've had about the euro to US dollar and in the ST outlooks that I've been publishing on our website, which I hope you've all had a chance to see, I've been speaking about the 2010 trough as being a trough of the 18-month cycle. Of course, it was definitely a trough of at least the 18-month cycle, potentially the 4.5-year cycle, and according to this analysis, a trough of the 9-year cycle. That might be something that could be debated, and I see Ron is asking if there's audio. Has my audio disappeared, or some people are hearing me? Perhaps. Perhaps, Paul, if you wouldn't mind, audio's okay, wouldn't mind suggesting maybe Ron needs to log out and log in again. Pete can hear me. Okay, good. I think people are mostly hearing me. So Paul, who's in the office with me in Italy for his sins today, we'll just send a message. Okay. Right, so this analysis is proposing that there's a 9-year cycle. Something interesting happens when Sentient Trader performs an analysis. Of course, there isn't really enough data to identify that 9-year cycle clearly. That 9-year cycle, it's a bit of a guess. But it is projected on the basis of the fact that, of course, we know that the harmonic ratio between cycles at that level must be either 2-to-1 or 3-to-1, and the nominal model that we're using has a 9-year cycle in it. So Sentient Trader knows that we consider a 9-year cycle to be likely, and so because it has found 3 4.5-year cycles, it confidently places a 9-year cycle in there. That's a bit of a wild shot. I wouldn't take it too very seriously, but I would say certainly that the 2010 trough was of at least 4.5-year magnitude. So let's have a look at what's happened since then, and since then has been very interesting. As we zoom in, I always turn off the semicircles because I find the semicircles a bit distracting at this kind of zoom scale. Now, as you will know, if you've read any of the ST outlooks, you will know. I'm trying to turn on this whiteboard. Always struggle the first time. There we go. You'll know that there was some debate around about October as to whether the October trough was in fact a trough of the 18-month cycle. Okay, we've identified for quite a long time that the 18-month cycle definitely occurred in June of 2010. In fact, one of our Sentient Trader users published to the Sentient Trader forum. I think it was. Let's see if he's online. He's not online today. He usually joins us. He published to the Sentient Trader forum. I think it was. only a week after that June 2010 trough. In those days, of course, we were still beta testing Sentient Trader software, and he published to the forum, and he said that he believed that was a trough of the 1.5 year cycle, at least, and it has proved with retrospect to have been so. So that's a trough that I look back at fondly, perhaps you could say, if you can think of troughs fondly. But anyway, you'll know that in October last year I was discussing the possibility that the October trough was a trough of the 18-month cycle. Let's just have a look at the evidence for that. If we measured it since the June trough, of course, that's only 15.9 months. And I argued against that trough being a trough of the 18-month cycle initially, because it would have been a very short cycle. I think it's much more likely that this trough that we've recently experienced in January, only 2 or 3 weeks ago, what date was that? That was the 13th of January, is most likely a trough of the 18-month cycle, which means that cycle played out 2 to 3 months long, which is by no means impossible. It's a very reasonable length for an 18-month cycle. So let's just zoom in again and have a look. Well, let me sort of finish the process one normally does. You keep zooming in, looking at more and more detail, and finally answer the question of what's happening right now. So I believe, according to this analysis, and I think this analysis looks pretty good. We'll explore some details of it as we carry on. But I believe that it seems very likely that a trough of the 18-month cycle fell on the 13th of January. Now, of course, it's quite early to call that trough, and some more cautious analysts would probably still be marking that 18-month trough with a circle and whiskers and say that we are expecting an 18-month trough and it might have occurred at that point. Of course, when you're making trading decisions, you would nevertheless have been probably taking the same trades. The process of actually confirming a trough is not necessarily very important in terms of making your trades. The fact that you know that one is due and might have occurred you end up making the same trading decisions as if you say, okay, that trough has occurred. It's a sort of a subtle point that might bear some discussion if anybody's interested in it. Anyway, so the more cautious analyst would probably be saying, I think it's too early to confirm that 18-month trough. Why does Sentient Trader confirm that trough already? You know, it's a fairly strong trough. Why has Sentient Trader confirmed it already? The reason why Sentient Trader has confirmed it already is because it has found enough evidence of the shorter cycles, the breakdown of the shorter cycles in the resolution of the analysis,